Join me as I challenge myself to invest in index funds for 1 year and see if it's really the smartest financial decision out there. Over the past few years, I've noticed a growing buzz around index funds. More and more people are talking about them, and it seems like everyone's jumping on the bandwagon. But what's the big deal about index funds anyway? Are they really worth all the hype? From what I've learned, index funds are a type of investment vehicle that tracks a particular market index, like the S&P 500. This means that instead of trying to beat the market or pick individual winners, you're basically investing in the entire market itself. It's a pretty hands-off approach, which can be really appealing to people who don't have the time or expertise to actively manage their investments. And that's exactly why I think index funds are gaining popularity among both novice and experienced investors alike. They offer a way to get exposure to the market without having to worry about picking individual stocks or trying to time the market. It's a way to invest in the market as a whole without having to be a financial expert. But before we dive into the benefits of index funds, I want to talk about some of the common challenges that investors face. Let's face it, the market can be brutal. Prices fluctuate wildly, and it's impossible to predict what's going to happen next. Even the most seasoned investors can get caught off guard by sudden downturns or unexpected surges. And that's not to mention the sheer amount of choice out there. With thousands of stocks to choose from, it's hard to know where to start. Do you go for the flashy tech stocks or the steady, reliable blue chips? And then there's the challenge of trying to time the market. It's easy to get caught up in the excitement of a hot new IPO or the fear of a market downturn. But let's be real. No one can consistently time the market. It's a fool's errand, and it's a surefire way to lose money. Another challenge is the emotional aspect of investing. It's easy to get caught up in the excitement of a winning stock or the despair of a losing one. But emotions have no place in investing. You've got to be able to separate your feelings from your financial decisions. And that's where index funds come in. By investing in the entire market, you're not trying to pick winners or losers. You're not trying to time the market or make emotional decisions. You're simply investing in the market itself. But how do index funds actually work? Well, it's pretty simple. An index fund is just a type of mutual fund that tracks a particular market index. This means that the fund's portfolio is designed to mimic the performance of the underlying index. One of the biggest benefits of index funds is their low fees. Because they're not actively managed, they don't have the same level of overhead as actively managed funds. That means you get to keep more of your hard-earned cash. Another benefit is diversification. By investing in the entire market, you're spreading your risk across thousands of different stocks. This means that you're not exposed to the same level of volatility as you would be if you were investing in individual stocks. And then there's the benefit of passive management. Because index funds aren't actively managed, you don't have to worry about a fund manager making bad decisions or trying to time the market. The fund simply tracks the underlying index without trying to beat it. Index funds can also be a great way to get exposure to international markets. By investing in an international index fund, you can get access to markets all around the world without having to worry about the complexities of international investing. And let's not forget about the tax benefits. Because index funds are so tax efficient, you can minimize your tax liability and keep more of your earnings. So how can index funds fit into your investment strategy? Well, that depends on your goals and risk tolerance. If you're a beginner, an index fund can be a great way to get started with investing. You can invest in a total stock market fund, which gives you exposure to the entire US market. Or, if you're more advanced, you can use index funds to diversify your portfolio. You can invest in a combination of domestic and international index funds to spread your risk and increase your potential returns. But don't just take my word for it. Let's take a look at a compelling case study that demonstrates the long-term benefits of investing in index funds. According to a study by Vanguard, if you had invested $1,000 in the S&P 500 back in 1999, you would have earned a total return of over 200% by the end of 2020. That's a staggering amount of growth, and it just goes to show the power of long-term investing in index funds. And the best part is, you didn't have to be a financial expert or a seasoned investor to achieve those returns. You just had to be patient and willing to ride out the market's ups and downs. So what's the takeaway here? Index funds are a smart financial decision for investors. They offer a low-cost, diversified way to invest in the market without having to worry about picking individual stocks or timing the market. By investing in index funds, you can minimize your risk, maximize your returns, and achieve your long-term financial goals. So why not give index funds a try? Thanks for watching, and don't forget to share your experiences with index funds in the comments below.